Alright, just a quick plug for the Green Star Trading Patreon here. If you're not a member yet, consider clicking on the link in the description box below, heading over, having a read of the tiers here, and signing up now. You'll be charged on a pro rata basis going forward each month. If you were to join our most popular tier, which is tier 2 here, you unlock the public Discord where there are dozens of channels for you to discuss multiple subjects with all of our members. You can ask me anything you like. There's a dedicated channel there where you can ask me questions about anything you like: market opinion, technical analysis, Elliott wave issues, previous videos, you name it. You also unlock all of my educational series, including the trading series, the 16 video strong Elliott wave series now as well. If you go for tier 3, you get all of the benefits of tier 2, and you also get the monthly dividend calendar, stock rating system, and a video which supports that as well. One of the biggest benefits of joining tier 2 or tier 3 is the weekly live stream, which goes on for sometimes between 3 and 5 hours, and you can put in requests for the charts you want me to look at in the week prior, and I will come around and do that in the live stream. Now, if we have a quick scroll down here, you can see we've now got 187 exclusive posts on the Patreon, which can't be unlocked anywhere else. You can't see them on YouTube. The most recent one was added just a couple of days ago, which is called The Goal of Trading. Now, there's obviously an opinion piece and subjective, but I do proffer a lot of important and useful information in this, and that's the kind of thing that you're interested in. This goes into the educational series as well. And yeah, we've had a couple of live streams recently, which are all time-stamped. You can go back and watch them. We've had the dividend stocks review, picks for February 2023, the dividend calendar, stock rating system, another live stream, and we had our economic indicators for January 2023. We'll have our economic indicators video for February 2023 coming up for tier 2s and tier 3s as well soon. So there you go. Thank you very much for listening. Please consider signing up, and now let's get back to the video. Hello everybody, and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right then, a quick update for Bitcoin, and I mean quick. This is likely going to be your only video on YouTube this week. It is the UK half-term school holiday at the moment, so I've got the kids at home and I am busy with family commitments. Plus, new educational video just went out on Patreon, which has kept me busy. Live stream to do this week as well. From next week, we'll be back to normal on YouTube, hopefully 2 to 3 videos. So, quick update for Bitcoin. If you haven't seen the video from 2 weeks ago, has Bitcoin bottomed, you should probably go and watch it, because basically nothing's changed. What I say we're looking for in that video is still valid, and it's still what we're looking for now. Okay, so we're going to touch on that for 10 minutes quickly in a little while. A quick update on the long-term count. I put out a video months ago, I think it was last spring, which is still valid to this day, which shows my long-term count. Now, if you're new to the channel and this is the first video you've seen on Bitcoin, let's just give you a quick idea of what we're expecting. Right, so we have a sharp correction with no new price extreme, a sharp correction with no new price extreme, and a sharp correction with no new price extreme. These are known as the bear markets, and the bull and bear cycle that a lot of people say is a 4-year cycle. Whatever, whether you believe that or not is irrelevant. What we have here is super cycle degree 2, cycle degree 2, primary degree 2. Each one is lesser in magnitude than the other, although this one is very similar in time to this one in terms of duration. But in magnitude, this is a smaller correction than this, and this is a smaller correction than this, and they're all sharp corrections. So what does this mean? Well, it means that we're now entering the primary 3 of the cycle 3 of the super cycle 3. So we're looking at multiple years, perhaps multiple decades of price action to come. And if Elliott wave in its traditional sense, if we read our Elliott wave principle, multiple sharp corrections which don't alternate, which are of smaller, decreasing severity, suggesting a wave 3 extension, then we can expect alternating structures with our wave 4s. So if we've gone sharp, excuse me, let's try and do this with the drawing tool. If we've gone sharp, sharp, sharp for 2, 2 and 2, we might go flat, triangle, combination, or something like that for our 4, 4 and 4. It doesn't have to work out that way, it's just likely that it will. So another feature of crypto is sometimes wave 4s can be very brief in comparison to the wave 2 counterparts, similar to commodities, or some, not all, similar to some commodities in that sense. So that may play out, that may not. But if we do follow the traditional Elliott wave logic, the traditional Elliott wave rationale, then these sharp corrections will alternate with their counterparts at wave 4 in the future, in the years to come. Now this is good news, because what it means is the market becoming less volatile. Instead of 70, 80, 90% collapses, maybe there'll only be 40, 50, 60% collapses instead, and they will be much more time consuming. Sideways structures. Now this is excellent for those of us who've been in for a long, who've been in now, who get in now, who've been in since 2017, been in since 2015. This gives us long periods of accumulation and stability within the market. Okay, something which we haven't had in these volatile, sharp corrections. These are excellent buying opportunities, but they are not great opportunities for much else in the space. Now, fours will accommodate that going into the future. Now, if you come into the market many years into the future, when these wave fours are occurring, you may find a 40, 50, 60% drawdown pretty hair-raising, but for us crypto veterans, that's a walk in the park. That's nothing. That's a Sunday stroll in the sunshine. Okay, so that's all to look forward to. And if we are 1, 2, 1, 2, 1, 2, it is way, way, way early still, and you have not missed out. This is still an amazing opportunity, even if you're new to the market. So there you go, a big load of bull porn for you right there. Tom getting extremely bullish all over you, but either way, that's the way it is. That's the way I interpret the long-term count. Now, all of that's wrong if we go below 3148 spot 33. Break the 2018 low of December, and all of that's wrong. Right? Got bigger problems by then, I feel, haven't we? But that's when it gets technically invalidated. So there's your long-term bullish count. Evidence for this, weekly time frame. Let's have a look. Each market bottom in the RSI on the weekly time frame of these major bear markets has had the same behavior. We have a downward trend of low, high, lower low, lower high, lower low, which then breaks with a move back to overbought conditions. We go from overbought to oversold on the weekly time frame. Overbought to oversold, break that trend. Overbought to oversold, break that trend. Market bottom, market bottom, market bottom, question mark, not 100% sure, but likely market bottom. Okay, and we also see other behavior. For example, I've went over this in the previous video, the MACD behavior on the monthly time frame. We go from an extremely bullish phase, all right, into a bearish phase, and once we start the cool off on the monthly time frame, we go lower. We get smaller and smaller bars on the histogram, smaller and smaller bars on the histogram. Here's the 17, 18 bear market. Here's the 14, 15 bear market. Here's the 21, 22 bear market. Once this trend starts, right, it does not reverse. Okay, we go back into being green. That's now underway. So it could now, all of this could still be wrong, but we would have to break all of the previous behavior we've been engaged in. So if prior behavior is correct, it fits up remarkably well with the idea of wave 2, wave 2, wave 2. So 3, 4, 3, 4, 3, 4 going forward. And that's the long-term count, guys. Super simple. So now let's look at the only way I can interpret a bearish count before we move on and look at the smaller time frame. Just do a quick update. So alternate long-term time frame. I've changed this a little bit because instead of being 1, 2, 1, 2, 1, 2 with this continuing lower, I feel now after this huge sideways move relative to this move down, in terms of time I'm talking, if this were to go on much longer for another deep zigzag down even deeper, there's no way I'm going to be able to convince anyone anymore that this is primary wave 1 into 2, because it just won't work relative to this and this. So the only way is to upgrade the wave degree to the top being here. Now, I don't care if this is primary degree, cycle degree, super cycle degree, into cycle degree, super cycle degree, grand super cycle degree, whatever the hell. It doesn't matter. It's completely bloody irrelevant. Alright, so forgive the labelling. It's not important. The point is, here's the larger degree top. That's the point. ABC here, ABC likely as a flat with 5 waves in a C, and then ABC lower to get the Y. That's the only bearish count I see. So, a move below the November low of 15,495 spot 37, we're back onto bearish terms again. Okay, and this has to take priority at that point. Yes, the invalidation's all the way back here, but it becomes highly unlikely to be correct at that point. More likely that we completed a larger cycle degree top up here, and we're going lower. So that is the one caveat going forward. So, let's talk a little bit of logic for a moment about how we can approach this as traders. Right, now we got guys on the Discord who can trade 5-3, or what we call the standard trade setup, the SDS as I came up with it, on almost any time frame. I've seen guys trade it on the minute chart. Now it's not something I can do. I do not have the time due to family life and other commitments to sit at the screen and do that kind of stuff, but I can get the bigger pivots daily, weekly, monthly, and I can get within a nice margin of safety on those. And you can play it both ways. Right, that's the thing to remember. You can play it both ways. You don't have to tie your hands behind your back. So you're a bear for a moment, right? Let's just assume that you're a bear and you've sold yourself that this is 3-3-5. Well, how are you going to play this? Okay, you're looking for 5 to complete. Whether you think it's already done or whether you think it's got further to go, you are looking for an impulse or a motive wave down and a retracement back. This creates a gap between the swing high and the lower high that you're assuming is 5 into 3. That creates a margin of risk that you can take as a structural stop, and you can even shrink it down further if you want to come down to a smaller time frame moving forward. From that point, you're short. Okay? You have the exact same option as a bull. But don't we want to be long, Tom? Yeah, you will be, but you can also be short. We'll talk about that in the smaller time frame, but here's longer time frame, 5 up, right? We don't want to be in here beyond the 5th, right? We break trend. We see divergence in momentum indicators and RSI at the top. We see weakening in structure. We see a break of that trend. We see 5 down, 3 back, testing it, right? All the typical behavior we get when we reverse. That's 5 down, that's 3 back. What's to say that you as a bull can't be short here either? There's no reason that you can't be. Because in your mind, this is A, this is B, and now we've got C. Right? C now goes into 1, into 2. There's your risk here for the long, moving back up. You've covered your short position, you covered your long position. Alright, you've got no problem doing it both ways. Now, I'm not saying you have to do it that way. If you want to be long and you're trading in and out of this and you've got 5 up and you get out of the trade, you come back in 3, you wait for them bounce and you go again long again, you're now into 3. You didn't have to short it. I'm just saying there's always the option of playing it both ways. And you're going to have sufficient time to do it. It's going to take weeks to bring this back to us. Or at least days, but more likely weeks. But I've seen guys, we've got guys on the Discord who can play this game on the 5-minute chart, right, and pull it off. So just saying, you don't have to tie your hands because you've got a longer term count. There's something which goes around on YouTube which really pisses me off, to be absolutely honest, which is when people look at Elliottician's work and go, oh well, that count was wrong, and it's like, guys, it could be worse than a coin toss. 50-50 is the best you're going to get from a coin toss. What matters is identifying the possibilities, then the probabilities, and how to enter and exit. That's what matters. The longer term count can be right and wrong. What helps is your understanding of where you could be and how to maximize the opportunity. That's all we need. You can be wrong time and time again, but if you aim small, miss small, right, it's not going to matter, because if you lose small, win big, it's all gravy. So there you go. That's got a bit sidetracked there, sorry guys, but that's the bearish count. So now let's come in and have a look at the smaller time frame on the other chart. Yes, that's where we need to go. Bullish count off of the low. Right, I know it's a little messy on this time frame. You know what, it's a little too messy. Let's just simplify it. Okay, let's just strip the chart right back down. Let's bring up our classical analysis, short time frame classical analysis here. Looking at this move here, we don't need the extension. Let's just look at the retracement. So let's just keep this super duper simple for the moment. 1, 2 to here or here. I've seen both used as a pivot for 2, and I think both are permissible, although this relies on the truncation, but whatever. 2, 3, 4, 5 to come. Minute degree, let's say into minor. Could be minor into intermediate, but I think it's minute into minor given the scale we're dealing with. So we've got 1 and 2, we've got 3 and 4. At the moment, this way 4, if it is a flat, is arguably complete. 1, 2, 3, 4, 5 to a low. Divergence at these lows on the 4-hour chart. We're here. Divergence between these two closing lows here. Okay, positive momentum returning. Break of that downward trend in the RSI. We've pulled back to 23.6 to 38.2, which is the high probability zone for a wave 4, and we've come back to the median line of this pivot. So if I were to take my 2, which is actually over here, and I take that as the pitchfork off of that pivot there, then we've come back to the median line as well, between the 23.6. We may well have 5 waves coming off of the low, guys. Okay, so if we've got 5 waves coming off of the low, let's look at this on the short term now. So let's say you've missed the 3 for whatever reason, you've missed the 1 for whatever reason. It's not a hurry up and wait now until the larger wave 1 completes. If you want to wait for that, I don't blame you. It's a larger wave degree correction, you'll get a better retracement. But let's say you got itchy fingers and you want to be in on this 5. Alright, well then this is 1, 2, 3, 4, 5 to you on a smaller time frame, looking for 3 back, looking for an entry off of that to go higher in the 5th, looking to get out 1 into 2 on a larger time frame to pull back, giving you that larger A, B swing, or 1, 2 if you're bearish. Alright, that's how I see it at the moment. I'm still thinking there's a 5th wave to come higher up here. 1, 2, 3, 4, 5, 1 back into 2, and that 2 in theory, because we're a wave degree behind Ethereum here that's already done 1 and 2 off of the low and didn't make a new low in November and is now doing a smaller 1 and 2 off the low, this should feel like shit sentiment wise. That 1 down into 2. If you read the personality of Elliott, or personality of motive waves in the Elliott wave principle, wave 2 should often feel worse than the prior low, than the actual low, because it feels like a resumption of the bear market. It feels like a resumption of downward trend, and everyone gets bearish as hell, and they're all screaming, oh, it was a fake rally, it's all over, we're going to new lows. We need that, absolutely need that sentiment in the market to get the wave 2 that we dream of, because the wave 2 we dream of is a deep, scary wave 2, because that gives you the best possible margin of entry to get. Right, that's the dream. An almost lower low to get into long. Everyone's going to be short. We need to do the opposite, and we'll have fun shorting it on the way back. So there you go, guys. That's how I look at that, keeping it simple. Now, if we look at an alternative idea, which is that it's already bottomed. Okay, which is this. It's a little squeaky at the top due to poor wave degree, poor wave relationship in both time and length. So what I'm saying by that is 1, 2, 3, 4, 5. Okay, so the 5th is a little short in price relative to the 1, and there's a little short in time relative to the 1. So it's a poor relationship. 5 and 1 often have a nicer relationship. Not perfect, but it's nicer. Alright, but it could be done. That could be 1. In which case, this is 1, 2, 3, 4, 5 into A, or 1, 2, 3, 4, 5 into A. This will be B, and then we'll come down and C. So essentially, in this count, if this is correct, we will come back to break this low on a smaller wave degree. Right, we'll come back and we'll break this low, and that would have been the A. It could already be done. That could, or we could come down lower to get the 5th of the A. Either way, we'll break this swing low, and then we'll head for lower targets. So I've got here the 50 here and the golden zone as a potential retracement zone for target. We've got the 23.6, 38.2, 50, 61.8 in time, in fib time. And a big fat old target box sitting down there waiting for that wave 2 to come. Now, that's an alternate way of looking at it. It's not my preference. My preference is that we're going up in a 5th and final wave. I'm hoping that's what we get, because it just looks better. But if it's not, 5 down, 3 back, 5 down again, I'm going to treat that as 3 waves off of 5, because once again, I am closer to the lows than I am the all-time highs. I'd rather treat an impulse off of that low as impulsive rather than corrective. Okay, I'd rather be a bull than a bear. Or, as I like to say, I'd rather be long and wrong than miss out of the three of the three of the three of the three. Okay, and then be in a struggle to try and get in and have to panic and worry about how to get in. I don't want that stress. I'd rather be long and wrong and have another go later than miss it. Okay, so there you go. Now that's how we interpret the bullish count off of the low. 1, 2, 3, 4, looking for a fifth higher. It's really what we want to see. We just want to see that. Please give us that. Because at that point we break the sequence. Okay. Let's do this in yellow. And let's say text. Just keep it in white. This is a major pivot which supports the break of the downward trend, the sequence of lower lows and lower highs. Okay, 5 up off of the low, breaking that sequence of lower lows and lower highs is exactly what the bulls want. It also is, ironically, as we discussed, what the bears want, because they want A, B and C. 5 and C. C should go beyond A. Okay, C should go beyond A. In a flat, in an expanded flat especially. So if that's the case, then we still get that play off of the fifth, of the 1 or the C, because we get A, B, C back, same pivot, likely shallower, as 1, 2, 3 off to new lows. And that is it, guys. That is the way I see the bullish count and the why am I deleting that? That's the way I see the bullish count and the bearish count at the moment. And I'm going to remain bullish until proven wrong. Like I said, I'd rather be long and wrong at this point. If this is 1, 2, 1, 2, 1, 2, 1, 2, I'd rather be long and wrong all day, because I can always get another bite of the apple, can always get another chance, can always get another shot. I do not want to be seeing this up to 50, 60, 70 grand and not be in. That would be a nightmare. That would keep me awake. Well, I'm not one to get emotional, and I avoid it in trading, but I think I would be desperately emotional in those circumstances. I really do. And that's how FOMO happens, and we do not want that to happen to us. So 5 off of a low and 3 back, long and wrong is preferable to missing out, in my opinion. Right, that's risk. There's always risk. There's no such thing as a risk-free trade. So looking at the busy version of the count, there's a messy version of it. Here's my target box. Here's my 5 waves down in a C. Here's my 5 waves up now in a 1. This is going to top out soon. Okay, so 1, 2, 3, 4, 1, 2, 3, 4, 5. Alright, 1. That's what I'm looking at. Just give me that. Give me that new high. Give me that larger wave 1. And then just give me a deeper, nastier, most vile, disgusting, heart-wrenching, gut-wrenching, soul-destroying 2 you can possibly bring. Just, for fuck's sake, just wreck it. 1, 2, 3, 4, 5, boom, down here. Right, 50, 60, 70, 80% retracement, please, if we can get it. Because that's just the best opportunity you are ever going to get. Right, and if that's what we get, and we just get all of that gut-wrenching bearishness come back into the market, that's just a dream come true, because that's the best longing opportunity you're going to get. Now, if we don't get that, and we finish somewhere up here around the major pivot or beyond, we can't know until we finish, right? Then 50 to 61.8 and a reaction off of it, bullish divergence at the lows between the 4 and the 5, the B and the C, you know, signs of a reversal, a break of that downward trend, the first 1 and 2 off of the low, we are long like our lives depend on it at that point, and we are just super aggressive. And if you're wrong and it comes down lower, so what? We look for the setup to come again off of a lower pivot, but that's what we're going to be looking for as and when it gets here. So I feel like I'm waffling now, guys, so I really must wrap this up. We're looking for 5 off of a low to complete. We're looking for 3 back, and we're keeping our fingers crossed that it's a brutal 3 back, because we want the market to give us back as much as it can. We want it to give us back as much as it can before we get back. Before we get in, and before we add, because greed demands it. Alright then guys, thank you very much for joining me. If you're new to the channel, you like what you're seeing, please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases. Feel free to leave us a comment in the comment section below, and as always, a huge thank you to my Patreon subscribers. Your support is massively appreciated. If you are new to the channel and you would feel and you're interested in becoming a patron, there's a link in the description box below. Head over, have a read of the various tiers, see what videos and stuff has been loaded up recently, and feel free to sign up. You'll be charged on a pro rata basis each month going forward. Alright guys, take care of yourselves. I'll be back with you soon. All the best. Bye bye.